Good weekend, all. Ira Epstein of Linn & Associates with your weekend edition of your metals market wrap-up for this Friday, the 29th of May, 2020. So here we are with the market that we've just gotten through a crazy month. In fact, we've just gotten through the COVID experience. It's not over, of course, but back to normal in many ways. I understand next week they're going to let staffs into office buildings in Chicago. We still don't have restaurants open, but that can happen next week as well. So life getting back to whatever the new norm is going to be, which gets interesting. Today we were watching an event where the president prepped us, and I'm talking President Trump prepped us, for his speech today, a press conference on China. To make it very simple for you, you get ready for these events, you got to play it very carefully in front of them because you don't know what's going to be said. To make a long story short, depending on which side of the street, pro-Republican, pro-Democrat, I don't think too much was said for either side. We know that we were pulling out of who. That happened weeks ago. We've announced it. He said it again today. We're done with that. We'll divert the money, $400 million, that overall was given into other organizations. The president brought up that they're looking into revocation of visas for some Chinese students and researchers from China here that have to do, and we believe they're part of the People's Liberation Army. They'll probably lose their visas. Nothing there, and no date on it. Hong Kong. Now we're considering Hong Kong apparently the same as mainland China. Therefore, the favored station status that they get, that could be gone. Again, we didn't get a firm date. The president walked the line. He let China know what's going to happen. Didn't do that much. They're getting ready to do it. At the other hand, he's opening a door, do something. He didn't mention trade deal in any manner, which we know the Chinese haven't lived up to at this point in time. So there's just an awful lot going on. But that's how it is. Stock market down in the early morning and into the afternoon down. And after the president spoke, you had a snapback reaction because nothing bad was really said. That's how I'm interpreting what went on. When we take a look right now at the monthly chart, on the gold, the market finished off at 1736.90, just underneath the Bollinger Band. That's exactly what I wanted to do. I don't like when it gets successive moves over it because the problem then is if you poke up again, well, staying over the band, you only do it 5% of the time. So as I said, we start off with the monthly chart, and this chart is favorable in the sense that the market's riding that band to the upside. Riding means that each week you're hitting these numbers, settling 1 week over, 1 week under, but riding it up, momentum's up, bias up. I then go to the weekly area chart of just closes. For the week, it's hard to believe, but we've managed to pull out a higher weekly close. It was strange. It was a rough week at first, and then the market got that big rally today, came back. When we take a look at the weekly chart, I think you can see what I mean. You finished off the week literally at the high of the week, all right? But you had been down here into the 1684 area, so that's quite a rebound, $50 that the market made up, and most of it was today that the market did that on. So what does that do to the chart pattern? Well, on the weekly chart, you still have higher lows, higher highs. The definition of an uptrend, higher highs, higher lows. Downtrend, lower highs, lower lows. So you're in an uptrend unless the market gets back under the 1683 level. When we take a look now at where the moving averages are, the 18-week moving average of closes in red, which is what I call the line in the sand. And the reason I do that, as I use where the market finishes, where the market's trading intraday, as a filter for other indicators. Now on the weekly chart, when you're over it, it means I have a bias to the upside. I'm then looking to make sure that with that bias, the market's keeping in the pattern of higher lows, higher highs. So I don't want to see 1683 taken out, which was in place well before this week's low. This is how you looked and you didn't take it out. So the weekly chart kept the trend up. The daily chart did not, but the weekly did. When you come to the Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. As such, when you first hit the band, which we haven't done, remember this is a weekly chart, we haven't done it since April, and now we're into June for all purposes. When it hits it, that's where I look for the pros to take some money off the table. If it's hit, it's 1809.10. So Just looking at the chart, I don't want to see 1683 taken out. And if the market can keep the momentum going, a possible number for the resistance, 1809.10, and momentum still pointing up. So we have no divergence at all. All systems still go into the bull side. When we look at the gold-silver ratio, we can look back at it and say, peaked out at the 120 area, back into the 93.89 zone. And as I pointed out to you, once the settlement, and that's what this is, we're looking on a weekly chart, is under that 18-week average, now you've got the bias going to the downside and the numbers falling with it. When we look at silver, this is a strong chart. Most recent high that this market, made, the 1950s up here, right? Against the $20 area. Well, we're at 1849.90, just $1 away from it. Trend, higher lows, higher highs, bullish. There's room here to back off if it wants to. It doesn't have to. The Bollinger Band's at 1954. My work there is covering it up, but that's where it comes in. Support back 1621 to 1588. Copper market, battleground is the 18-week moving average of closes, right here. If the market can clear the 247 level with momentum pointing up, trend up, could get a thrust to the upside in the market. Ultimately, if the market kept going up, the 267, 20, 30 area to 268's the resistance, supports right here. As long as you don't take out this 228.95 level, what do we have? We have an uptrend, upside bias, momentum pointing higher. Platinum market, same thing. Now remember, auto manufacturing back up in America. In fact, it'll probably be right now getting really into second shifts. Wouldn't surprise me. The supply chain should be to the point where they're just about there for the auto manufacturers, which means they'll need more platinum eventually for the catalytic converters and the palladium markets. Higher lows, higher highs, support right through here, the 100-week average down to the 18-week. Resistance way up at 1026.25, the upper Bollinger Band. In the dollar index, it's an attempt at a breakout on the downside. Now, this market has been basically with a pattern of lower highs, lower lows. But let me take off this week. We had not closed under the 18-week average since back in March. Now you're back under it. This could be the breakout to the downside with the next objective, the 100-week moving average. Let's call that 97.10 and resistance 99.26. To break the downtrend, you have to get back over 100.60.5. First objective, right here, 97.10. Secondary objective, 96. Let's call it 19. Momentum down, bias down, trend down. You know, you find yourself, I hope like me, there's oftentimes you're second guessing yourself. And I have to be honest with you, the trading got a little bit better over the past couple of weeks. And the reason is the COVID, it's not that it's worn itself out. The market's gotten more adjusted to it. The stock market, we know, with these crazy numbers in the VIX, you're going to get your 2% moves, almost on average is what you're getting. But when you're looking at the futures charts, well, we still see the grain markets in trouble, the soft commodities trying to come to life, bonds and notes pretty flat. But I cover all this every morning with specific buy and sell recommendations in them. So if you're looking for that additional confidence, at 5:40 in the morning, I start recording and I cover all these markets in this sequence. There's a slide bar on our website where you just pull this and it'll say, oh, you're in the metal area, you're in the energy area. It tells you right where you're at. There's also a lexicon over here. You can work with that. But the idea is, I'm giving you the morning news at this point. The news will cover what's going on in Europe, Asia, what's going on in America. We have to cover the other hemispheres, we do. And we're telling you what we're seeing, where they're playing out. Plus, I'm going to cover with you the day's reports, the expectations of them, what time they come out, and where the market's going to be at that point in terms of market psychology. How do you get it all together? Just go to our website. Go up to the word research. Everything's explained right there. Sign up and away you go. I'm Ira Epstein. You have a great weekend. I'll see everybody come Monday.